Very warm welcome to the second panel conversation of this NGX CEO Roundtable, which broadly looking at creating the enabling ecosystem for accessing capital from the Nigerian capital market. In this session, we are going to focus on critical areas and policies affecting listed companies and capital formation in Nigerian capital market, policy reforms, next steps, and action plans. I am Owo Okiti, as I've been introduced, Managing Director of Business Day. I have with me on this panel very experienced and eminently qualified individuals, lawyers, investor, market players, regulators, to speak on the topic. I mean, you speak from your own experience. You've been on this market for as long as I can remember. What are the policy constraints that you see today?
I think very quickly, when I think of the issues the industry, that is the Association of Issuing Houses of Nigeria, face as a trade group, perhaps the biggest challenge will be time to market. Time to market for transactions. And you hear it from all trade members, where issuers, potential issuers, would decide perhaps not to come to the market because the conditions and timetable for approvals will stretch far beyond the event that they want to actually use that capital to do. And so may then decide to go first to the bank market and then come back to us to refinance. So at that point, you really lost a good opportunity to introduce new participants into the market. The second and quite fundamental issue, which Funcho had mentioned, is also the fees chargeable. I've had the privilege of having worked in the US capital markets environment, as well as the United Kingdom capital markets, now before coming back home to Nigeria. And, I do find that whereas in the bond market, the fees can be very thin because, you do quite a lot of bond issuances, in the billions of naira on a daily basis, and the trading of bonds run in the trillions of naira. On the equity market side, because of the nature and of diligence required, it takes a lot more effort to prepare the company, to write the story, to make sure investors are protected. The regulator here has imposed effectively the same kind of fee threshold for equity transactions as it is for bond transactions. Whereas in the United States, for example, an IPO could easily be costing the issuer as much as 7%. But 5% would be an average fee for investment banks to charge for an initial public offering. In Nigeria, where I believe that the sweet spot for bringing transactions into the market would be sort of deals in the 5 to 10 billion naira size. If you're charging 1% fees, that's 15 million, and you have 2 or 3 parties on the transaction, that's maybe 15 million a piece, and you're going to run this project for 6 to 9 months, you can see immediately it is not a profitable transaction. Therefore, most advisors would then prefer to go to the bigger ticket transactions like the MTNs, where the deal size is 100 billion rather than 5 billion, or the Dangotes or the Boas. And this then effectively crowds out the smaller issuers from the market. And this is a point we've made time and time again to our regulators, but somehow they seem to mix up cost of transaction in terms of secondary market trading costs with the cost of the primary issuance when you're actually bringing a fresh story into the market.
Let me start from the micro level. We've been talking about time to market, and I think we can help that situation by doing a few simple things, soft issues. I know Ike has talked about the AIHN members running to committees with the regulator and things like that. But I think the time we spend with the regulator is a bit too long, okay, especially if parties have brought in all the documents that are required on time, appropriately, everything complete. I think we should have a process, and I know the SEC started that process at a time where there was a timeline for approvals to be completed. Can I suggest to the SEC directly that if in 3 weeks we haven't received our approvals, can we access a commissioner or the DG to discuss? So we do simple things like that so that we can understand why after 3 weeks, we still don't have our approvals. Can I also suggest to the NGX, because the NGX in the queue of regulators is somehow at the bottom of the pile because they seem to have super regulators. Can I suggest to the NGX that as often as possible, but definitely annually at the beginning of every year, you try and get a collaboration of the Honorable Minister of Finance, Honorable Minister of Trade, DG Sec, FCCPC, Vice Executive Chair, get them all seated and understand the economic objective specifically for that period. And based on that economic objective, get them on board to assist with certain issues. Number one, tax exemption issues. We had the tax exemption 2012 to 2022 order, which I think in that 10-year period did a lot to raise activities on the capital markets because those activities were tax exempt, issuance of bonds, etc. And I thought one of the things that we would do critically was ensure a renewal of that order for another 10 years. And it didn't happen. I think we need to look at that. There's an amendment to the Companies and Allied Matters Act, the section 142 there, that specifies that before I can raise capital, I can sell equity, I need to offer to all of my existing shareholders. That's some preemption right for a public entity. It doesn't make sense. So it makes it difficult for me to come to the market. So we need to look at all of these issues. And then the big elephant in the room, which really is the cost. And Ike has looked at cost from the perspective of fees earned by professionals. And that is fundamental because one of the things we're seeing now is that the diligence, the training, the effectiveness, the efficiency, the quality of staffing of operators and professionals has diminished very greatly because it's not attractive to be a capital market operator anymore. But for me, as important is the issue of the fees charged by the regulators. And I'll just, in closing, talk about one transaction. And I'll run through it. And it's not an imaginary transaction, real life transaction, not too long ago in the last 2 years. You pay 385 million to FCCPC. You pay 289 million to SEC processing fees, 339 million to CSCS. On the exchange, you pay 574 million. You pay stamp duty at crossing 306 million. You're paying nearly 2 billion. That is preposterous.
It's interesting that, sometimes you think you have a problem, and it's only you facing it. Then you hear other people and they're talking around the same thing. The issues that have already been raised, they're here. Timeliness. And on the back of that timeliness, I'll just expand a little. I think both Ike and Aswet touched on it. The streamlining of the process. Beyond just you find that you want to list, you have a number of documents you have to file, even if you've been there before, if I might just say so, even if you've been there before, because even if you're doing a rights issue, you're going through quite a lot as well. So you have that streamlined process, you're talking to a number of bodies before you get to where you need to get to. So we do need to streamline the process and make it less cumbersome. Because indeed, when we've gone through the time and everything, then what your critical need was at that point in time is gone. Or you may have had to go and find another solution to that problem. And more often, that solution might not necessarily be the best thing for the company, right, long term, but you have to first survive short term before you begin to look medium, long term, saying it very practically. Like during the COVID time, for example, we're still in the pandemic, but specifically I'm talking about 2020, when, no one really knew what was going on in 2020. The costs, I was so happy when Aswell gave one example of 2 years ago. Yes, the fees are quite high. The costs are high that you have to pay, and you now look at it as well. I'm going to the capital market because I need to raise funds that are suitable for what I need to do. And the fees you have to pay, the cost is just discouraging. We now have the situation now that the 10-year window has lapsed, we are now looking at the taxes as well that we are paying, or the taxes that are being charged at this point in time, creating further, should I say, challenges or discouragement. Let me pick something else that's quite practical, but Transcorp is listed, but we have a subsidiary that is also listed, and that's Transcorp Hotel PLC. Okay. We need to take a look at it and say, how can you encourage parent companies to list their subsidiaries, noting ownership structures and all of that? How do we do it in line of even the float requirements? Is Nigerian market developed enough to just do a one size fits the tier you're in? I don't want to say all, because I'm sure Temi was waiting for me to say one size fits all, so he can jump in and tell me that there's primary market, secondary tier, and all of that. No. Even if you find yourself in the tier 1, you're still different companies in there with different levels, different ownership structures, different characteristics. If you just pick one thing and is it going to work? Let's look at further looking at the market. We are aware we're in this country. We know that the market is illiquid. In the past 10 years, I think just about 4 IPOs or so that has come up. The last one being the MTN one. And just like Carl, I was really delighted to see that 78% of the subscribers were women. And I can't remember how many percent again, under 40. But it was just really encouraging, especially for that under 40, because it means that they're still looking at the market. So with this illiquidity in the system, and you're battling the float requirements. You tell me, meet the float requirements. Of course, I want to meet the float requirements. Every year I'm having discussions. I'm talking to my advisors, paying a fee, by the way, paying a fee to the advisors on it, engaging with the various regulators. If we come to the market to try and address this, who's going to take it? How active is the market right now? Although, in fairness, I would say in the past, for a while now, seeing more trades, but we do need to still have more activities in the market. We need to bring more people to the market, more businesses, I mean to say, to the market. I was discussing with the CEO of United Capital Securities and engaging on this second tier. I'm a large corporate, but if we look at Nigerian business platform today, how many large corporates are there compared to the SMEs? We have a lot of tech firms that are coming up, startups, different, maybe less than 5 years companies. Are we able to create policies or address existing policies that will reduce the barrier to entry? Because it's, the entrepreneurs that are coming up, how many of them can actually access a bank loan? How many? Not so much of them. But are we able to develop products that can let them come onto the capital market? I'm not going to say I'm an expert product designer for capital market. No, we have others on the call that can do that. Yeah. But we need more businesses, and the businesses we have today, quite a proportion of them are in that SME space. We bring them on, that creates more activity. It creates more activity on the market, and with the more activity, you get more people talking about the market, more interest coming up in the market. But really, one of the things we say is we need to have the NGX should create, there should just be more interest.
Policy or regulation around cost of issue, time to market, and other regulation that we have in place that will attract or enhance listing. Let me start by saying that the SEC has in the recent past even streamlined this issuance process to attract issuers to come to the market. What do I mean by that? We start with the NGS, that time NSC, to now streamline the documentation requirement. And we say that, look, the first thing is, let's approach this offer in this way. When an issuer is coming, the first point of call is the SEC. You want to register, even if you want to do listing by introduction. So those documentation, if they have been filed with the SEC, you don't need to file with the NGS, for instance. And then again, we now realize that even in terms of doing pre-inspection of those entities, we have a protocol of doing it a joint pre-inspection, just to allow these kind of entities to now quickly get the transaction on track. Now, talking about time to market, cost of issue, this is a very key issue. And I know that what we did at the SEC, we didn't just sit down, and I think I want to correct this impression. the SEC didn't just sit down to come up with this peg transaction cost. Market has been engaged, issuers were engaged as well, and input were received before the SEC even come up with this position. And what did we do further? We hear the Association of Issuing House, we sat with them, and we now said, look, let's look at it in this perspective. When you have a structured transaction, a transaction that is a structured product, that is a bit complicated and it entails a lot of parties, that curve in terms of transaction cost will not apply. But when you are doing a plain vanilla transaction, for instance, that is why that curve applies. Again, we didn't just, because we listened to the issuers, and the issuers are saying that, look, why can't we encourage more issuers to come to the market before you think about like deregulating the entire cost of issuance? So it's a discussion, and I know that it's something that we need to discuss further.